I've seen many other panels before us. Like these panels have a general concerning vibe to them, right? Like, is crypto becoming a worse version of TradFi? Now we do have also another very spicy take on this panel as well that we're gonna cover. First of all, let me introduce myself. Amir. I'm the founder and CEO at Puffer Labs. We focus on generating yield. We started as an LRT platform. Now we do, of course, have our own specialized infrastructure and execution environments for institutions and developers to create scalable applications on top of Ethereum and public chains with the most access to liquidity. In this panel today, we're going to talk about crypto alpha and if it's still there, the inefficiency and efficiency of the markets, if you still have it. So without further ado, I want to go around with our amazing panelists so they can give a round of introductions. Please.
Hi, I'm Sam Gaer. Thanks to the TIE for having us and me. I'm Sam Gaer. I'm the Chief Investment Officer at Monarq Asset Management. Prior to that, I was the portfolio manager at Block Tower. And prior to that, I had my own hedge fund for roughly 8 to 10 years. I can't keep track of it. We were one of the largest VIX traders in the market, doing about 10% of VIX. And I stumbled into crypto as one of the first market makers on CME in 2018, got the bug, and here I am. I had a couple of pretty notable positions in the industry, including Chief Information Officer at FINRA, as well as Chief Information Officer at NYMEX, and then eventually EVP COO at NYMEX, where I led open outcry to electronic trading and the eventual $9 billion deal with CME.
Thank you.
It's quite a career, Sam.
Nothing stands up to you, Jim.
I'm Jaime Leverton. I'm the CEO of ReserveOne. I was the CEO of Hut 8. I also sit on the board of a bunch of companies that span the somewhere in the intersection between digital assets and high performance computing. And I also have a family office and do some venture investing through my family office.
My name is Jed Breed. I run a venture firm called Breed VC. We really focus on early stage founders, focus on crypto pretty holistically across the industry. Previously, I was the head of digital assets at Circle, where I helped launch USDC back in 2018. And I've now been in this industry now for 13 years. So been through the ups and downs that we all are so fond of.
13 years in this industry is like 30.
Yeah,
50.
Yeah,
50.
You could tell from my hair, right?
Hello, everyone. Thanks for joining, and thanks to the TIE for hosting us. My name is Melo. I've been in the industry for 28 years, traditional finance mostly. As we all say, went down the rabbit hole in 2017 when I read the Bitcoin white paper and joined RAAC, which is a Real Asset Acquisition Corp in September 2024. And I'm the lead at RAAC for our open finance division.
Awesome. Thank you all panelists for the introductions. So I'm going to jump right into it. Is alpha gone? Is it hibernating? Where is it? Or yet we're in another cycle. Alpha is going to come back and we're going to see it again. I want to take your take on this. So we start with you, Sam.
Thank you. I get asked this question all the time. I think it was even asked last year at the TIE, the same question. And every year they say, is alpha gone? Well, people's talk in every market is alpha gone. We were talking about it in VIX. We were talking about it in S&Ps. We were talking about it back in the trading pits when there was a ton of edge. Is alpha gone? There's always alpha. And going back to the trading pits, and that's where I actually started my career, which is why my hands are always moving. Going back to the trading pits, my first day, a wise old gentleman came up to me and said, don't worry, if you think the market has moved or if this market gets dull, traders always figure out a way to build a better mousetrap. And so from that perspective, that's how I've always kind of looked at the markets where, okay, one door closes, another door opens. The problem that we have in crypto right now is for several years, back from 2017, 2018, up until recently, 0% interest rates. Crypto was the bright, shiny object for what I call the marginal speculative dollar. And that marginal speculative dollar chased everything from Bitcoin and Ethereum to alts. Remember, we used to have alt season, DeFi summer.
Not this year.
Now we, like I say, now we have
Not yet.
now we have now we have alt week and sometimes alt day. So
Hour.
alt hour, exactly.
Ton's had a big week. You can give it to Ton.
Okay. And so, yeah, so that marginal speculative dollar has a lot of other things it can chase. If you want yield, you've got 11.5% return of capital dividends in MicroStrategy Stretch. Whatever your opinion is, you're getting 11.5% annually with a monthly coupon. The hurdle rate in terms of a risk-adjusted return for a fund, for example, to go into DeFi, and if they can get 14, 15%, it's just honestly not worth the operational lift, right? So other things that it's chasing, what? AI, crude oil, gold, the stock market itself. There are some equities that have much higher vol than crypto, right?
What about prediction markets?
And I was going to get to prediction markets, Jamie. Wow.
That's where the degens are hanging out.
Wow. I thought that, well, anyway. And prediction markets, right? And so investor, that kind of retail speculative dollar has gone elsewhere. So alpha now is harder to find. I've seen this in markets before. Specifically, we saw it in VIX after Volmageddon. And I used to liken it to a pool where all the guppies were gone and all the sharks are swimming and trying to get each other. And so what we're seeing at Monarq, though, is there's this new innovation called AI, and we've been integrating it extensively to shorten our cycles to find alpha, to test and to find alpha. And so we're still seeing opportunities in things like funding rate ARBs, specifically in mid-frequency to lower frequency trades, such as convexity. Convexity is a big favorite of mine personally. Volatility has recently hit in the low 30s, and on Bitcoin, it's a great opportunity to own upside gamma, upside convexity, and that's where we place some bets. While the market has no direction, we place some bets on the upside, place some bets on the downside, and you've got to be patient. And so there is alpha. You just have to look for it.
Very interesting that you also mentioned that you utilize AI to optimize for alpha hunting. That's a very interesting one. Jamie, how about you guys? Where's alpha for you?
Yeah, I think we've probably come to a point in the industry where the pump and dump, the stand up a coin and pump a coin is dead and hopefully not coming back. I think we've washed a lot of that, what crypto people thought was alpha, chasing those token launches. Now what we're seeing is people only getting rewarded for building real things that are solving real problems, whether it's with tokenization or new innovations on layer 1 or layer 2. I think that's the exciting part. It shows that the industry is maturing. There is still alpha here, but it's alpha that you need to be a little bit more patient, and we're not going to see the big moonshots and rocket emojis. We're actually seeing real solutions getting built by real builders, and I think that this is a really good thing for our industry. It doesn't mean alpha's not there. It just means it's smarter alpha.
Understood. Of course, Jed, you're a VC. Of course, thank you for investing in Puffer.
Proud investor.
Yes. VCs are probably always looking out to alpha. Where is alpha? Where is it for you guys?
Yeah. So, like I said, I've been in this space for quite some time, and I think for a VC, it's kind of really the network is kind of the net worth. I think is actually really important. So, I've built my tentacles go pretty far in this industry, and so being in the right rooms, being in the right Discord groups, being in the right Telegram groups, is a really a good source of alpha for us to source early stage founders. Maybe they're just like generating an idea in a Discord group that aligns with something that we're looking, and we'll typically go deep with those type of things. Even, I mean, crypto Twitter, it's still, there's a lot of traders on crypto Twitter that are like depressed right now, but you have to remember that they're like liquid traders. And
Everything on crypto Twitter is true, though, isn't it?
oh, it has to be. Yeah, you have to. So it's like if you kind of go there for sentiment, you're going to be depressed. And you have to remember they're short-term traders. We run a 10-year fund, so we're in it for a long haul. So there are still some, I'd say alpha is like a little bit more limited there, but kind of the private network, I think, is really where we generate a lot of our quote unquote alpha.
Are you using an AI to scrape any of those channels for you?
Yeah, we use AI for primarily for X/Twitter. So like
Not Discord or Reddit?
no, it's like it's very, you need to like be a member, kind of like you can't just cold ping people. You need to build relationships in these groups.
Yeah, I got bullied out of there, and
Yeah, if
I'm
you
gonna do it now.
if you don't participate, you get kicked out.
Just gave me an
tough.
idea.
Yes. Very, very interesting. Well, Mike,
Yes.
you guys are definitely building an RWA, and you
Correct.
have an RWA platform. Where's alpha for that? Where's alpha for you guys, like, and why are you in that?
I would agree with Sam. Like, I think the market is inefficient. There's fragmentation. There's asymmetric risk and reward. You can just go and look at some of the yield opportunities that exist in open finance, and you can see that there's a big business in basis trading and carry trades, because there are borrowing and lending is a very large business in open finance, and yield is still the easiest way to go and capture return, especially if you're in a bear market, or as we call it, a bit of a depressed market now. You can sit in assets and as we used to say in traditional finance, clip coupons while you wait for prices to repair. And even if Sam, or Amir, if you look at like maximum extractable value, like the MEVs, like that alone shows that the markets are still inefficient.
Yeah, there's always edge, right?
Always.
Yeah, and you just now, unlike a couple of years ago when you could pick and choose between your 20% annual yields, 30% annual yields, and funding rates, you've got to wait a little bit. You've got to be patient, and you've got to pick your spots. And if you're getting 20% annualized funding rate, then you're starting to think, well, what have I done to deserve this generosity? What am I doing wrong here?
3 arrows.
And if I'd add, even
3 arrows.
even in traditional finance, like we've always said that the yield engine now is in open finance in a sense, because if you look at 10-year bonds in traditional finance, we're at 4.5, I think, today. So, but we're way higher, or you can get much higher yields in open finance than that. So,
Yeah, it is certainly an interesting take on, especially alpha sitting from coming from the institutional side back to the crypto side of things, where you mentioned everything is mooning or rocketing up. Now I get to more specific questions. Sam, you mentioned in Monarq, you guys are using AI a lot to find alpha or even optimize for your ARBs, right? What happens once everyone starts using AI? And this bridge, are you gonna start working on your own AI models that gonna outcompete other AI models? Where are we going after this? Like, is inefficiency gonna disappear, or like, how do you deal with that?
I'm a little ahead of you on that. We've been working on our own AI models for quite some time. Look, every ARB, every opportunity that you find that is structural, where you've got kind of free money clipping coupons, they generally have a half-life. ARBs specifically, high frequent. I like to say the dumber the trade, the more expensive it is, and the quicker it vanishes. And AI is just doing the same thing that for instance, we did an open outcry to electronic trading, which is democratizing a lot of the information that was previously only available to a select few. And so ARBs are easier to come by if you're using AI. And so there's going to be a better mousetrap to build somewhere. You're just going to have to find and be a step ahead. You don't have to be the fastest. You just have to beat the next guy.
Very interesting. So, guys, Monarq has one of the best AI models. If you guys want to move your assets, they are going to be better than others. Jamie, of course, track record shows you guys built one of the biggest BTC miners in the North America. We see that one of the most successful stores of Bitcoin is MicroStrategy, a DAT model that grows and basically price goes up, everybody makes money, and everybody's happy. We see more DATs coming out, like many more, tens of DATs doing the similar approach. Do you think that is still going to be the play for Bitcoin, or do they have to start offering more products like Stretch or I think MST, or if I'm not wrong, another product by Strategy? Like, is
I
that
think
going
he's
that
got
direction?
7 prefs now, all different flavors of prefs.
Yeah.
And then I don't know if you saw his announcement last night, but he's actually talking about selling his high basis Bitcoin and capturing some of the capital inefficiencies in that to pay off his dividend, which is something that the crypto Twitter, would have gone apoplectic at the idea that sailors selling Bitcoin. And that didn't happen. And why didn't that happen? Because it's just prudent financial engineering, and everyone's growing up, and they recognize that smart engineering is smart, and it's not hodl at all costs to your detriment. So I do think there's something to be said for the maturing of even crypto Twitter in certain instances like this one. As far as DATs go, I mean, I think I've heard Saylor himself make this reference. Like, how many banks are there in the United States? I think there's over 4,000 or some crazy number. I'm Canadian, so we only have 5. But it's as much as the market will bear, and everything has to stand alone. It has to be different. It has to offer something different that the market cares about, and that is on the management team to build something that creates a market demand that exists and hasn't been fulfilled by the other products that are out there.
So Jamie's being a little bit modest here because there are DATs and then there are DATs, right? Most of what you saw coming out in the tail part of last year was this kind of money grab going on where you had very inexperienced teams with flawed business plans and just a terrible capital stack in the public company that they were merging with go to market. And what could go wrong? Well, we see what's gone wrong. The companies that have really good, sharp management, that are well capitalized, good capital structure, and are focused on the mission are the ones that are still going to be around. DATs are a great idea. Some of the execution has just been horrible. I happen to be sitting next to somebody who has a wonderful team, one of the best teams in the industry. I know them well. And
this is Sam's way of calling me old and my team.
No, I'm old.
It's wise.
I'm crypto OG. I'm the old guy. So
we're a wise vintage.
Yeah, so certainly execution is something that you think matters the most, especially on DATs. And
execution really matters in public markets.
Yes,
it really matters.
If you have no experience running a public company, don't go run a public company.
Well,
and also doing your filings on time is pretty important. We've seen a lot of them not hit their deadlines.
It's really important. Yeah.
So we basically covered from an asset manager, hedge fund side, to all the way to a DAT. Now, Jed, to you, you're a VC, right? You invested in Circle. You invested even you saw Solana. You saw where it started. You saw ETH. I'm pretty sure you probably saw ETH at 2 cents all the way to $5, all the way to where it is today. Can we have same things happen today? Do we have the founder asymmetry today to see such growth? Like, is that the alpha that you will see currently in the market?
Yeah. So the what's basically, as a VC, we need to go back to like our core value prop and why LPs are trusting us with their money and why, you know, why we make the big bucks. And that's really discovering the gems before they become gems. So what's really important is really focus. For my stage, we like to be again the first check in, a guy with a deck, a gal with a deck, just incubate, help them. And what we've really learned, and the idea at my stage really doesn't matter. It's more of like a psychology game, really figuring out if this founder has what it takes to build through all the stuff that goes into being an operator and building a successful business, you know, going through like just rolling in the dirt and making it work, because it's really hard to be a founder, and it's really, really hard to question that, you know, what you're doing, is it worth your time? Are you wasting your time? You know, are people going to look down on you if you fail? But the founders out there that we back, we really kind of screen for that personality, that resilience that can last through all that dark period. I mean, there are some that are rocket ships, but most usually, like, we see like 4 or 5 pivots before they hit PMF.
Do you use an AI model to assess their level of grit?
This is like the touch that like kind of, yeah, it's like really like, I think the best way is like when you bring founders out to like a dinner or drinks and kind of really kind of peel back some layers versus like one video call, is kind of really getting to know you. And I don't think AI can do that yet, but
That's crazy.
Maybe.
No video call. You have to do
In
in-person
person?
meetings.
Well, that's where you get the most quote unquote alpha. Yeah. So and it's also on the VC side right now. It's like we have a lot of dry powder, which is great. We raise our fund during the bull market, and things that we're trading for these tier 1 founders, like $50 million seed rounds, or like 5x lower, $10 million. So now is a great time to be a crypto VC. It's contrarian. Obviously, everybody wants to invest in AI. We have done actually pretty well in AI as well. Like, we've been focused on decentralized AI since 2023. Yeah, that's like pretty much our focus, and there's still a lot of edge to be found.
Awesome. I personally vouch for Jed. So if anyone's writing a check,
Thank you.
I got a great idea for you, man.
Let's hear it.
So, Mike, you guys are building in RWA. One of the reasons RWA's took shape was actually accessing this 24/7 sort of liquid market in some ways for the assets that seemed to be illiquid for the longest time in traditional markets. Aside from that, where do you see the alpha? Is it the distribution? Is it the issuer? What are the items that you're focusing on that is your alpha in RWA sector?
Yeah, like I think if we look at the high level, tokenization as a concept is accepted. So institutions are coming, they've bought into tokenization, and the pool of real world assets out there is gigantic. Like, set aside the traditional finance assets.
But do they all need to go on chain?
No, they don't. Absolutely, Jamie, they don't. But take, for example, at RAAC, we're bringing real estate on chain. So uncorrelated assets are required in open finance if you're thinking of matured risk management practices. You have stability with real estate. You have reoccurring rental income, so yield. Because again, our belief is it's all about yield in open finance. And so the unlocking, Amir, of these dormant assets, these kind of brick and mortars that can become unlocked and in fact used as collateral, because I'm sure everyone knows borrowing and lending is a gigantic business in open finance. But the collateral that's being used is all risk-based. And if you look at the distribution of the total crypto market, like call it 2.5 trillion, give or take 100 billion, and you look at how much stable tokens occupy that 2.5 trillion, we're looking at 300 billion. That's lopsided. All these professionals on stage, I would ask you, go find another market where you have such a lopsided distribution. It doesn't exist, which means the total addressable market for stable assets is gigantic. This is why stable coins are one of the largest and fastest growing segment of open finance. So the unlocking, utilizing, composability, the new standards, is, in our opinion, gigantic. That's our play. We think there's a huge opportunity there.
Absolutely. I want to now continue on that question. Of course, I wanted to ask so many more questions. We have such a brilliant panelist here. I think we have about 5 minutes. The entire market is always adapting to the new events. It's constantly adapting. You mentioned there is the issue of composability that is an advantage. But in the recent events, in recent hacks that we've seen, that DeFi composability actually backfired. As an on-chain builder here, I would like to see the big asset managers that are yet conservative to completely move on-chain to do certain actions. How are these events, including the recent hacks at one of the biggest perp exchanges on Solana Drift, one of the biggest staking platforms, restaking platforms, Kelp, which eventually affected Aave because of the composability? How do you see this as an outsider, as a not user to these? And would you even consider entering into this market? Or are you waiting for it to mature, or you would never even consider it? Start with you, Sam.
Sure. So we are in this market. We are in DeFi. I think everybody here would agree that DeFi had a pretty terrible April. And
October.
and October, and maybe the past year or so. But I think I'm not necessarily sure I would frame the question that way, as much as I would frame it as what institutions at the end of the day are profit maximizers. And so what would it take to get that hurdle rate that I spoke about before to the point where it's attractive enough for an institution to say, you know what, we're going to put X percent, we're going to dip our toe, we're going to put our toe in the water, and we're going to allocate to this particular protocol. And I think that when you talk about specifically DeFi, institutions are going to be looking at rates, and they're going to say, on a risk-adjusted basis, where do I get the most return? And whether it's crypto, whether it's TradFi, and as these markets all go into a single market instead of just crypto and TradFi, it's a market. It's just going to be, which asset class are we going to allocate to?
Got it. So it's still very safe on-chain builders, as long as you have transparent risk-adjusted yield that they can really.
Just to add, I think that there's going to have to be a little bit more maturation in the DeFi sector, specifically. And obviously, after what happened with Kelp DAO, I'm thinking that things like signature policies, key rotation, etc., are going to become forefront for auditors and for risk managers and investment committees.
Yeah, I've been thinking about potentials like similar to SOC 2, but implemented on Web3 or crypto. We need more OPSEC rather than just look at the smart contract, right?
Well, yeah, I mean, I think a real opportunity out there is a compliance layer, an on-chain compliance layer.
Yes. Anyone else on the panel?
I would say we have a nation state actor that's going after our industry with Mythos level AI. So
most successful hedge fund in the world.
Exactly. So it's definitely a tough nut to crack. And I agree that there's some really good protocols out there that are building time locks and all kinds of different security protocols that we've actually been pretty active in as well. But we also have hopefully the power of Mythos as well to harden our smart contracts as well. But back to what Sam was saying, if you say the hurdle rate is 11.5% with stretch, which is a very arguable hurdle rate, is it safe or not? How long does it last? That's a big question. I haven't looked into it long enough to really understand fully the risk of it. But right now yields are definitely squeezed a bit, but the opportunity to loop things, specifically RWA, more stable assets, I think are getting juicy enough to bring, and if they're solid enough from a security standpoint, we can get some institutions.
Jamie, you wanna-
I think you always have to do the appropriate counterparty risk assessment. I think people sometimes get really excited because they see a 20% yield and they ignore some of the red flags associated with the counterparty that they're trusting, or they don't do all of the work necessary to assess that risk. So I think assessing counterparty remains paramount. And then the other thing is just diversification matters. Understanding everything in context matters. So just like don't lose sight of the basic core principles of good risk management.
Yeah, especially if there are few protocols that are offering the same product, maybe just de-risk by allocating them. And
Exactly.
so instead of just going all in, that one thing might be sort of like a very existential threat.
I mean, like portfolio composition, and
Yeah.
concentration risk.
Exactly. That's something that is surprisingly a lot of allocators on crypto are just growing. How about you, Mike? What do you think?
Yeah, I think like sometimes you need an event to kind of bring you back to basic. So if you take the great financial crisis of 2008, 2009, the industry got lazy by packaging up bad debt. So almost now, I almost feel like the infrastructure setup perhaps got lazy, and we've seen the consequences of that. And I think the re-emphasization of how do you properly set up your security, like you said, is really, again, should have been the top priority. Maybe kind of went back a couple of steps, but now I really think it's becoming really the top priority because, to your point, like the coincidence of Mythos coming out from Anthropic and overlaying it to all of the hacks in April seems a little bit coincidental, but I'm not saying anything about that in a sense that it's just coincidence. But yeah, I think that whole emphasizing, proper security, proper setup is really something that everyone is thinking about now.
Amazing. So alpha is there if you look for it. Stay secure. Do your due diligence before being enticed by 20% return. Had a great conversation with all of you. Thank you all panelists, and thank you all.
Thank you.
Thank you.